Thank you, everybody, for your patience. A little bit of technical difficulties this morning. But welcome to Salt's Unsalted AMA for February 8th, 2024. We're excited to be back with the crew, Kelley, myself, Justin, and Dan. Today we're going to provide some updates on the ever-evolving Celsius refinance timeline and steps that we are looking forward to, hopefully to get everything closed out here over the next sort of 4 to 6 weeks. We'll give an update on that. We're going to cover the timeline. We have a new calculator that's available. Justin and Dan will help describe that and how you can use that, and also give a jurisdiction update just in terms of the questions that we get both on California and other jurisdictions. We'll cover that off. And then we'll open it up to any other questions and topics that anybody would like to discuss. Justin, I'm going to give a little bit of an overview based on, I know, the conversations we've been having around the timeline, and then would love to have you elaborate and fill in some of the additional details that I know have been sharing with people and talking with the community about, so that everybody can be in sync and on top of. And if anybody has any questions, please raise them. We'd love to have you come up and ask. I think the information that came out last week was, one, the effective date is January 16th, 2024, and that date is driving the conversion price for any excess collateral claims. And then for the people that are refinancing, the payoff date will be the date of when they pay off their loan, and the price of crypto on that date will then determine the amount of crypto they get back for their principal amount, or their claim for their USD claim for their principal. Is that just inaccurate, or is there anything you would add to that description?
Yeah, no, that's certainly accurate, Hunter. I'll just describe that a little further in detail when we get to the calculator notion, where Dan and the team have updated the calculator, and we can start distributing that to the creditors that are interested in having the new updated calculator reflecting the current numbers.
Okay, but that was a change from what we had previously understood, and I think what had been communicated. I'm not sure they could have made it much more complicated if they had tried from the beginning, but I think we're all trying to work our way through it. And I think the calculator will help everybody because it will draw out the impact of the different crypto prices based on those different dates. The other element that I wanted to touch on regarding timing, we have been in contact with Celsius over the past week about the refinancing process as well as the timing. And what we do know, we don't have specific dates on when the refis will happen, but we do know refis are behind both the custody payouts and the earn payouts. Would encourage everybody, if you are in either of those two creditor categories, to make sure you're getting your payouts and have that crypto available if you want to be using that as collateral for a loan. That will help with any LTV targets that you are looking to achieve. But as soon as those payouts are done, Celsius will move into the refi payouts and resolving any of those claims. We do know it is a small team at this point over at Celsius, and so they are working as quickly as they can, but there is a lot of work for a small team to get through, and we'll continue to keep everybody up to date on the progress there and any expected timings for when that is likely to take place. Justin and Dan, based on your guys' conversations with Celsius and others, is there anything else to add around the timing or key elements to the sequencing of events?
Yeah, I'll go first, Dan. Basically, there's another notion that I wanted to bring up. In the conversations we had with them, there was a very distinct thing that Salt and others are trying to accomplish in having the earn and the class two, which is the borrower category, anyone who had a loan, to have their collateral and their earn amounts brought over at the same time. Their official position, or at least Kirkland's official position on this, is that they're not going to be doing that. So, in just so you know, in the future, it's very unlikely that will happen. There is some confusion about what if you're in a jurisdiction that you can't get PayPal or you can't get Venmo, etc., or the options or Coinbase. So Coinbase, PayPal, and Venmo are the options there. And if in those cases, essentially, if you can't get those, then you're going to be receiving a fiat check. There's a handful of people that I've been in touch with that have expressed that they've actually gotten a letter or an email, actually, an email that states that exact thing, where they say, okay, you're going to be receiving a fiat check because of X reasons. Then, so for those that have problems with those jurisdictional areas, that is very likely going to be the scenario. So that's what you can expect. And then in terms of the refinance themselves and the order and the cadence that they're doing, as Hunter alluded to earlier, earn custody are going first. And so earn right now is the distributions are happening, and which means that naturally we don't know the exact dates, but that means that the refinances are going to be pushed out a little further, of which we don't know the exact time frame on.
I don't have any additional updates other than to say that if you haven't already indicated to Celsius that you plan on refinancing, to make sure you email Kirkland as soon as possible, and you can get that remedied through direct communication with them. But other than that, that's all I got.
Yeah, that's a really good point, Dan. If you have not, or if you haven't, or you missed it, or you didn't get an email signifying that you need to do that, then I would reach out to them directly as soon as humanly possible. Again, their official stance is that if you pass I think it was the January 18th date where you didn't elect that you want to do a refinance, then ultimately what's going to happen is you're going to pass that time, or anything past that time frame, they can essentially say that you're not going to be able to do a refinance. But if you have extenuating circumstances or you didn't get an email, you can essentially say, hey, I didn't receive an email, or I didn't, maybe it was in your trash or spam folder, etc. However that happened, you can at least attempt to do that. So if you want to do a refinance still, you can, but again, only if you communicate with them. If you don't communicate with them, then you're basically just going to receive a set off. So just a note for anybody who missed those.
Yeah, the email distribution is Celsius Creditor Answers at Kirkland.com, just so everybody's aware.
That's great. And if anybody has any questions in the timeline, please make a request to speak and we'll bring you up. But we'll keep things moving in the meantime. And Justin, I know that based on the new information, the team has pulled together an updated calculator to help people understand, one, what they're likely to get back in terms of crypto, and then how that provides some optionality in terms of their LTV for loans and what the repayment options are. Can you walk people through the updates as well as where, if they're interested in the calculator, how they can get a copy?
I'm sorry to interject. Can I chime in on, because I think we're going to get a little bit away from a high level concern that I think all the borrowers have, and I'm going to have to jump off right now. So may I please chime in at this juncture?
Oh, sure.
Thank you. So I don't understand, as I think everybody, all the creditors and everybody that has been involved here, why things are being done in the order they're being done. There's usually not a lot of rhyme or reason behind anything that's been done. The way I understand it, the only creditor body, or the only actual subset of creditors that have any market exposure is the borrowers that are going to refi. Why they are in the back of the line, being that they have full market exposure coming into a bull market 69, 68 days from a halving, is just the most inexplicable thing in the world. It's effectively haircut over haircut. So I don't know if there's been any conversations around that and why exactly they're doing it that way. Again, it seems like they're being super vague about the way things are going to play out. I think you just said right now 4-6 weeks, right? 4-6 weeks, we could effectively be looking at another 50% haircut measured in sats effectively on the principal. I think that it would be really appreciated by all the borrowers that are here in this call and everybody else if the lending partner, and again, not to put anybody on the spot, and I know that it's hard to get their attention to wave them down, because they decided now of course that we're going into distributions to bring in the skeleton crew, right, and cut down on expenses the second that distributions come along. So now everybody's running around like headless chickens. So to the extent that you can have a conversation that I think borrowers would appreciate, I think would be along the lines of, what can we do as the future lender of this borrower subset over here, of these creditors, to limit their market exposure? I don't know if you guys can have conversations around that. A lot of us, I think, have already signed or loan agreements. So I don't know if behind the scenes there can be some type of mechanism where you guys can actually step in and do a transaction and custody, quote unquote, escrow that transaction, some smart contract, something to that effect, to be released at a later date. I think that some creativity around the mechanics of that would greatly be appreciated. I haven't gotten any codes yet. I'm also an earned creditor, but to be completely frank, those are set and established. The market conditions, the volatility doesn't really affect the recovery anyway. I think the people that are holding their breath are specifically the demographic on this call. Right.
Yes, you bring up a really great point, and I completely agree with it and appreciate it. And I'm happy to take on that in terms of reaching out to Celsius and seeing what we can do and advocate on the community's behalf, because I agree with you, right? The exposure in terms of the price, if it were to run up, it's impacting what everybody gets back as a crypto payout for their principal claim. And so if we can figure out how to,
it's already running. Yeah, absolutely.
Yeah.
100%. And the other thing that I would say that would be greatly appreciated, and it's already running, right, to the extent of like 20%, 25% from where it was in mid-January at some point. But even now, and the other thing is just the general unknown about 4 or 5 weeks. But the other thing that I would just encourage is, to the extent, and I think this would be greatly appreciated by any borrower out there, because remember, all the other borrowers that are going with other lenders, call it lend or lend, I don't even know what that name is, figure, all the other players, they're in the same boat than we are. To the extent that a lender can come up with a mechanism with the debtor right now to say, hey, listen, we're willing to limit market exposure till you guys figure out your stuff, because they're basically fully exposed. I think it would be really appreciated. And it might even, frankly, I know that if somebody was offering that and was saying like, listen, we're locking the price of it, like Figure came up and said they were doing that, I love you guys, but I'd probably be talking to Figure right now. So just a heads up on that.
No, completely understand. And I think it's a really well-made point. This is the first time it has come up. We haven't had any conversations with the debtor around this before. So I appreciate you bringing it up, and we will actively take it to them today to see if we can get on a movement on it. If any others have had any conversations or further insight, I welcome you to come up and share what you know, because I think, as we have been advocating for and trying to do the best we can, is really be advocates of the community. And I think this is a great point where this issue is a group issue, and it is one that if we can find a solution to, we will do our best to bring it back to everybody.
As always, very much appreciated.
You're welcome.
Yeah, great.
Hey, let me go ahead, Justin. I'm sorry. I was just going to say, and pause there for a little bit to see if anybody else has any other information or any other perspectives they want to add to that. I think this is a great topic, and if we can advocate for everybody, we absolutely will.
Yeah, no, by the way, thanks for joining, Tony, just seeing you there. Basically, what it boils down to is the bankruptcy situation is not, it is not, it blows my mind that the borrowers are at the highest exposure rate. The only thing, what was interesting was that last month, everyone was predicting that the ETFs were going to go send the market into a spike and into a bull run. And it basically did the opposite. Obviously, everyone knows these different things, but without getting into price speculation, at the end of the day, let's just hope that for the borrower's sake, while we're trying to figure out maybe an active solution for this, just hope that there is no spike in the market. And to me, I think that's obviously a big signifier, because if the market was going downwards, then it wouldn't be as much of an issue as a pressing issue. But at the end of the day, right now, over the past handful of days, the market has gone up, and I would say that in essence, there is the market factor of 50-50. It's basically, if it goes up, then that's not good. If it goes down, that's better. So let's just cross our fingers and hope that happens as well. That being said, we don't want to rely on that. Obviously, the most important notion is trying to figure out how to actively to do that. So yeah, Hunter and I and team and Sean and everybody else we'll look to speak to the debtor directly, as Hunter said, and we'll try to actively pursue something along the lines of trying to be a little bit creative on this for you guys.
That's great. And so just a point on that, and you're exactly right. Nobody has a crystal ball. The market goes up, it goes down. There's an argument to be made that we're in the beginning of a bull and all that other stuff. But all that aside, the fact that we are the only subset of creditors with market exposure, that's the really important thing. I think that's the argument to be made with the debtor. Like, why would you put the only guys that have market exposure at the back of the line? Make sense of that. What's the logic behind that? It doesn't matter if it would go up or down, whether in our favor or the inverse. The whole thing is, if there's market exposure, we should take that off the table. And that means put them in the front of the line.
Yep, no, I agree. And those arguments to be made, obviously, about these are over collateralized loans. And I think that they're doing it based on, boy, this is going to be me coming out on a limb here for it, but their earn class was much larger, it was in the billions. The borrower class was significantly smaller. I don't know if that has anything to do with it, but I don't know, maybe if that does or doesn't. But in the meantime, yeah, we'll definitely do what we can on our side. I'm actively pushing these notions, and so we will definitely get all over that. Thank you so much for coming up and talking.
Thank you.
Yeah, be curious to know if anybody else, and Tony, if you have any insight, would love your view on this, whether there were discussions about the ordering. I think what the issue that's been brought up in terms of the borrower group being not put in first is a really great point. Don't know if there's any other insights people have.
Yeah, we're pretty actively lobbying to get this stuff rolling. It's no secret the borrower group isn't exactly the favorite group in this bankruptcy. Maybe some of that's our fault for being more aggressive, less passive than the others, but it is what it is at this point. There's a few issues. I agree with what Santiago's saying 100%, but there's a lot of procedural issues which should have been handled months ago, but unfortunately they weren't. Part of the process, and they've broken this up into a two-step thing, right? They haven't really given us a lot of details on it, but from my understanding, we're supposed to be getting a notice that we're supposed to have gotten last week, and we're supposed to have gotten the week before that, and we're supposed to be getting it this week, and we might be getting it next week, where we basically all pick the lender, or I think you authorize your information to be shared with a lender, and I think it's a second form where you get to pick the lender. So SALT can't just go out and buy X amount of dollars in Bitcoin, for example, for collateral, because they don't know how many people they're allowed to get their information. They haven't gotten any information from Celsius. Celsius is playing it by the book, but doing it in a very stupid way, unfortunately. So right off the bat, the first form will take at least 7 days, a week. So that's 1 week. The second form, if it comes out right away, that's another 7 days. So we're looking at 14 days at a minimum from when we get that form. They've added a lot of complications to this process, which I guess they're probably doing it correctly, but they're doing it in a very stupid way. And I don't know what remedies we have, because that's what the plan calls for. But at the same time, there's been a ton of stuff in the plan that they just decided to not follow. So they could easily just not follow the plan. Nothing will happen. I'm not going to complain about it. I don't think anyone else here is going to complain about it. But unfortunately, that's just where we're at. The earn distributions have not gone well. I'm being generous here. They have not gone well at all. They started with convenience class. It appears that this process is probably manual, right? So they send out the codes, and I think they have to manually approve the codes after they send it out, which obviously, what the hell? But so this is the level of sophistication that we're dealing with. This is why they couldn't distribute the coins from the app. It would have been a disaster. They barely handled custody, and custody was I don't know, 10,000 users or whatever, 20,000. Think of 300,000. So that's where we're at. We're stuck with this. We keep pushing them. I think David has another meeting today. Hopefully we get more details, but we're just stuck in limbo. Now, I don't know if we have any remedies either, so.
Yeah, thanks, Tony, for that. Appreciate it. At the end of the day, you're right, though. What you said at the end is We're not sure what the remedies are, but at least we can voice our opinion and express our creditors, all the creditors. I don't care who you're lending with or who your chosen lending partner is. At the end of the day, it's going to affect everybody. And so this is a notion that's important to bring up to them, at least tell them, hey, they're like, this is really affecting everybody. And maybe they can come up because, and I believe I actually second your notion of the manual process. I believe that there's the manual process going on. I feel like there is a very slow rollout, which means that it pushes out our ability to refinance creditors even further. I guess it really just comes down to what can we do to help? And as Santiago mentioned earlier about when he came up to speak, what creative ways can Celsius look at that we can work with or help work with on Celsius to try to get something done from our side, and we'll tackle that. But no, everything you said was absolutely correct, Tony, and appreciate you coming up and saying that. Hunter, I interrupted you right before you said we're going to say something.
No, I completely concur with it. You're saying. I think we will do as much as we can to advocate and think creatively about how to, if there's ways to take out the market risk. But I think as Tony accurately summarized, is that right now we are limited until we get through a few hurdles in terms of getting the permissions for Celsius to share information, and for us as a lender to get clarification on both the final outstanding balance to pay off, plus then confirmation of the crypto that will be paid back. And then the points being is well made is that the effective date is locking in a good portion of it, but we still have to find a way to lock in the principal amount to help take out that market risk. But we will definitely take the baton on that and do everything we can do to help advocate for the community, and then report back at the latest in terms of the AMA next week.
Yeah, there's also a lot of market risk for the lender as well. But we're obviously everyone's just focused on how the lender can help us, but I don't think we're helping anyone if we cause Salt or Let-In or Figure or whoever to lose a ton of money as well. Just trying to help us. Because if they were to get, let's say they were to get a concrete number on what's going to be refinanced, right? Let's say 100 million. They go out and they buy 100 million worth of Bitcoin. If it's taken 3 weeks, 4 weeks to do the earn distributions, and seemingly they're going to hold the excess collateral till after that, these guys are going to sit on 100% LTV loans for weeks. What happens if we get a huge drawdown? What happens if we get another 20% down, 30% down? Now you have what was 100% LTV now going to God knows 140, 150. And then what if the borrower says, my loan isn't healthy, I'll just take the set off at this point. Now they've just gotten absolutely wrecked trying to help us, which is not the goal here. It's not what anyone wants. It doesn't help us, doesn't help anyone if we cause this amount of issues for the lenders. So it's a very tough spot.
Yeah, certainly
Tony,
agree. Go ahead, Hunter.
I was going to say, no, I appreciate the sentiment. I think we're all trying to be in this together, but find the path that allows us to get this resolved. And I think, as Santiago said earlier, right, we all want to manage that market risk and get it off the table. Agree with the thoughts you shared there, but we will take up it with the debtor to see what we can do.
All right, guys, we're having some technical issues again. I've lost my audio, and it sounds like Hunter has as well. Give me 1 second. Let's see if Tony's requested to speak. So let's see if we can hear Tony. Tony, can you go ahead and try and speak? I can't hear anything right now.
Yeah, I
Okay.
thought it was me, but I guess everyone just got kicked out.
Yeah, exactly. Okay, so you're on. I can hear you. Dan's requested. Let me get everybody back on stage, and then we'll go back to what we were doing. One sec.
Might be Kirkland. They're messing with us here. They don't want us to solve these issues.
All right, so there's Dan is coming up. Hold on. It's so buggy today. It's not even letting me add you, Dan. All right, let me see if I can get Hunter. 1 second.
But yeah, on the loan side, we're in a weird spot. A little bit of just waiting. Hurry up and wait is typically what seems to happen. These guys take forever, and then they decide to move, and then they want everyone to do it that day, even though they made us wait a month.
Can you guys hear me?
Yes, we can hear you, Justin. Go ahead.
All right, awesome. Yeah, no, the hurry up and wait theme has been very apparent, Tony. It's a very good point. So we'll on our end we'll work from doing that. Did we lose Hunter, Kelley?
Yeah, I'm DMing him now.
Okay, great. All right. X XAMA attacks again.
Hell.
Yeah, it's ridiculous. It's okay though. So hopefully they get these bugs worked out for the community as a whole on X. But all right, in the meantime, there's one point that was really interesting that hopefully I say this correctly, but in terms of our ability to conduct the refinance for creditors, there is the sharing of information. Tony, have you heard of anybody actually receiving that email quite yet? Because we've been getting a ton of questions about that. We keep getting emails from potential customers and people who have signed loan docs with us, and they're asking where the document is from the legal team for sharing information. Have you heard of anybody receiving one yet at all?
No, nothing yet. The last I heard was either this week or early next week. Hasn't come out this week. Maybe it'll come out tomorrow, but I wouldn't hold my breath. The same guys that are doing distributions are, I think, in charge of that. So, not to speak ill of the people that we're depending on, but I don't know how sophisticated the group is, right? Just listen, I have to deal with PayPal. It is what it is. I'm not thrilled with it. But the PayPal thing is so dumb. All they need to give us is these codes. All you have to do is create a spreadsheet. Every user number, whatever it is, you put one code for ETH, one code for Bitcoin, and it can pop up on the app. We're paying for this app. The app is useless. It doesn't tell us anything, doesn't have any information. It doesn't take a genius to change the code a little bit so that it could just give us our code for the app. It's not hard. You can hire someone off of, what is that thing called?
Upwork. Upwork, yeah.
You can hire someone off of Upwork. They can charge you by the hour, right? You're looking at what, a couple hours worth of coding, and you can do all of the US earn users. The Coinbase, from my understanding of it, is actually pretty sophisticated on Coinbase's end. They just give Coinbase the user info, right? My name, my date of birth, my social, and then Coinbase will match it with their database. And then it will just get credited to you. But they're doing it all manually. And it's getting credited to some people on Coinbase, but it's literally as they submit to Coinbase, that's how it's getting credited. It's not that hard. This is not a lot of work. You can go, the same guy you hired off of Upwork, you can have him go in the app and adjust our balances to what will be our distribution. That's it. That same spreadsheet you can send to Coinbase. Coinbase will do all the work. They're literally doing all the work.
Yep, couldn't agree more. And I love the notion that you just brought up about Upwork. They've had plenty of time to do this. Not trying to throw any shade, but as a lender, we're trying to work with them. But ultimately, yes, they've had plenty of time to prepare for this. Hiring a coder to create some kind of automation would have been a very smart thing to do, and it doesn't take a lot of insight to figure that out. So I wish something like that would have been built beforehand to increase the speed of distributions, because there's not much automation that's actually necessary. You could have hired an engineer to do this in a week or so, and obviously there's been plenty of money given to lawyers and stuff like that inside of the estate. You can look at the distributions now, and roughly everyone's gotten. I feel like that's been a very neglected part of this. I really hope after this, it's not helpful to us all now, but I really hope that these bankruptcies for these crypto companies, the BlockFi, Celsius, Voyagers of the world, etc. I hope that they create some kind of methodology to help improve this into the future. If there is, hopefully not, but if there is, and there probably will be, other crypto companies that do file and have crypto in their treasury, etc., because the world is increasingly including treasury of crypto on their balance sheets. And in those cases, all of these people that are involved in those treasuries and would be potential creditors will be in the same situation. So there should be something really that's set for creditors that is more legal precedence to allow them to actually have more automation, faster distributions, because it's the length of time that frustrates everybody. The length of time that we're all sitting here crossing our fingers and hoping that we don't have, in essence, we're trying to decrease everyone's exposure. And the way you do that is by speed. And so effectively, from a first principles basis, that should really happen and occur. Of course, I'm just one person in this planet of 8 billion people, but I think that more people should care about the legal precedents that's set when it comes to a technology and blockchain platforms, businesses, corporations that have treasury on their balance sheets. So that's a whole nother rabbit hole we can go down. But just to be frank, I really hope that the expediency of this is understood by the team. So we'll work on our end to do that. Hunter, are you back yet? I can start going through the rest of the scope here if you're not back yet.
No, I am back, but why don't we do that? If you can, let's move on to the calculator to give people a tool to at least help understand some of the elements that are in play, and we'll continue to advocate from a timing, which I think this has been a great discussion today.
Yeah, certainly has. So we'll move to the calculator then. Okay, so basically everybody, all the people that are interested in understanding Salt's math on how you can determine your LTVs and what your recovery is going to give. Tony's done a great job on the community calculator for those who are involved, and he's posted on Twitter and in the Celsius channel. We have our own Salt official calculator that we've been giving out. So if you want the updated one, please reach out to sales@saltlending.com and we can give you the updated calculator. If you want to schedule a call to discuss with the sales team, there is the ability to go over that with you on a call for some of those who don't feel comfortable just doing the calculators on their own. We're more than happy to help. That can be done also through sales@saltlending.com to set up a meeting, and then we can respond back to you with a link for a scheduling through our Calendly to get you on the calendar. So the sooner you do it, the better. These days we're a little busy, obviously taking a ton of creditors and future customers on in terms of having meetings. So the sooner you do that, the better. And we're more than happy to just give the calculator if you don't want to do a meeting as well. To cover off the major changes, the effective date on the 16th essentially applies to your excess collateral. And this is for clarity's sake, the principal amount is the price of Bitcoin or Ethereum on the day of the refinance. So all the other numbers have been set, but as we talked about earlier, that exposure, basically, if the price of Bitcoin in the market goes up, then you would receive a net less coin. That is where we've been referring to and talking about the exposure of the market decreasing the coin amount that you're actually going to be receiving. This new calculator will help you understand that. If you want to reach out to us, we're happy to provide that. There's also a notion of, and Tony, if you can ad-lib and discuss this maybe a little bit after I'm done here, there's a notion of two other things that are interesting. There's a possible secondary distribution. We don't know what that distribution looks like, but that has to do with the claims and or quote damages from some of the creditors who are pursuing their own legal means with the estate and the debtor. So once those are settled out, I think, I'm not sure what the rough time frame is, but I believe it's roughly 3 months. Then there will likely be, and this is not official information, but there will likely be a secondary distribution that will be done after those instances have been settled. Then in general, there's a 5% total claim adjustment that will add to your claim in general if you basically agree to not go after Celsius and that's built into our calculator, assuming people want the extra 5% to essentially agree that they're not going to potentially sue Celsius afterwards. Tony, if you're still there, if there's any extra context that you can provide on that.
Yeah, so it's about damages that we had against Celsius. We have a claim against Celsius for the crypto amount, and because of bankruptcy, that crypto amount is valued at the time of bankruptcy. We also have additional damages due to Mashinsky and all these guys lying to us, defrauding us. So part of the class claim settlement was, instead of litigating that for 300, 400, 500,000 people, you'd have to litigate each one individually, which means you would have to hire an attorney. We'd have to pay for the estate to basically defend Celsius, even though they really don't want to. I'm sure they wouldn't mind billing for it, but it's hard to defend. And then actually coming to a number that your damages are worth, all of that stuff takes time, court fees, a whole mess. So part of the class claim settlement was everyone or whoever opts into it or doesn't opt out rather gets a 5% boost on their claim. In return, they waive their right to go after Celsius in the future. The litigation trust is going to go after Mashinsky and all these other guys, but the actual entity, which is Celsius, we're basically waiving those claims. So 98.5%, I think, of all the people didn't opt out, but something under 2% did opt out. The people that opted out, there was like $48 million worth of claims total, and that 48 million filed additional damages that Celsius is saying was $500 million worth. So because those damages are still floating around, they had to withhold that amount from our initial distributions. So I don't know how long it's going to take. They say it should be like 3 months or so to settle those claims. So we should be getting whatever amount doesn't get paid out from that 500 million back in a second distribution. Second distribution will have whatever that amount that doesn't get paid out, whatever gets received from litigation trust, maybe something from clawbacks, maybe they sell some of the illiquid assets quickly. We don't really know. So we're just speculating on what that number could be. But of the 500 million, let's say the judge grants them 5%, like everyone else took, that amount is $3 million or $4 million, whatever it is. So there's potentially $500 million just floating around waiting.
Thank you for that, Tony. Yeah, that's well described. And so that is built into the calculators where you have the 5% additional on your claim. But the second part that he was just that Tony was alluding to, that's not built in the calculators, obviously, because that's speculation. But the speculation of it is really based on the percentage of how much that would be. It's the consensus with most people who are involved in the situation that there is definitely a consensus about there is money floating out there that has not been allocated yet, which is partially the reason why I believe, Tony, correct me if I'm wrong here, that the haircut is 57.9% now, as opposed to what everyone was expecting before.
Yeah, borrowers got the holy trinity of wrecked. We have to pay our principal in full. We got to take a haircut on the collateral. Now we have to take an additional haircut on the collateral, and we're going to be last in line to refinance, which means, knock on wood, hopefully Bitcoin and ETH tanks. But if it doesn't, now we're reacquiring that principal amount at a higher value, potentially.
Yep. Thank you so much. That's all for me there. Hunter, if you want to move forward to the next item.
No, I think that was great. And again, if people want a copy of the calculator, please reach out to sales@saltlending.com. The last item that we wanted to cover was just a quick update on jurisdictions and the refinancing. So if you are submitting loan applications, we have received legal opinion, and we are comfortable with underwriting loans from all jurisdictions outside of California. And I'll give an update on California here. So please, that's New York, Hawaii, and other jurisdictions where there has been challenges in terms of providing loans. In the case of the Celsius refinancing, please submit your loan application if you haven't, or loan request, or just reach out to sales@saltlending.com. And we will underwrite those on an individual basis. But we are doing everything we can and fully expect to be able to help refinance those loans. With respect to California, we continue to have really positive conversations with the DFPI, both in terms of the reinstatement of our license as well as our ability to refinance the Celsius loans within California. And we fully expect to be able to do that. We don't have a definitive date, but we are moving in that direction. And if there is anything that indicates that we will not be able to refinance, we will let everybody know as quickly as possible. I wish I could be more specific, but what I can tell you is the conversations continue to progress positively, and we do fully expect to be able to refinance all the Celsius loans in California. And if you have individual or specific questions, I'm happy to address anything today on the AMA, but also don't hesitate to reach out to Justin and team at sales@saltlending.com. If you want to have a individual conversation dialogue, we'll happy to do that.
Great. Yep. Ultimately, there is at this junction just communication. We're more than happy to continue to communicate. We got a ton of inquiries, questions individually. For those who don't, I mention this probably almost every week now, but I'm going to go ahead and say it again. If you don't feel comfortable coming up on stage and discussing anything, of course, feel free to reach out to us individually and we can have a conversation. More than happy to. This is time consuming for us, but it's worth every single minute, every single second. We wouldn't have any other way. More than happy to have those convos.
And then we'll make the last call with questions. I know Kelley is pulling together one in the chat that I'm opening up here. But if anybody else would like to come up and ask a question, please do. So the question we have that has come in is, let me read through this. I'm only following the Celsius refi casually, but it seems like many of all the borrowers are required to take a collateral haircut on receiving their loans. Will California loans be facing the similar collateral haircut when servicing re-updates? So yeah, this question from a Celsius refi, everybody will be treated the same in terms of the collateral that you'll be getting back on the principal versus the collateral you'll be getting back on your excess collateral, which the calculator can help address. And if, as Justin indicated, if you want some more, you want to be walked through and have more questions about that, then please reach out to the team. We'll be happy to help you understand that and clarify it to the best of our ability.
Right. Hunter, I think John was actually asking if he's not a Celsius California loan holder once we reinstate our license.
Oh, from the salt side, if it's just a California loan, there's no haircuts there.
Yeah, no, ultimately we're not gonna, there's no penalization as a California customer of ours. Yeah, there's no problem, no issue there.
Kelley, are there any other questions? And then if not, Justin and Dan, are there any topics that you want to cover off before we close out?
I do not have anybody in the queue, no. We just got one. Actually, Zed just requested, let me add him to the stage. Cool. All right, Zed, you are on stage.
Hey, thanks for bringing me up. I just literally clicked on to join the space as you're ending, but I'll go back and listen to it if it is recorded. I didn't. Oh, it is good. Great. Thanks so much for recording this. I'm not a Salt customer, but I have complimented you guys in the past, and I did try to tell other creditors that are going to be using your service that your rates are extremely competitive. Because I took out a loan via Wells Fargo just for simplicity for myself. But anyone who's using Salt, that it looks like to be and we really need help from any, entities because we're out here flapping in the breeze. So do applaud you guys for all you're doing. With that being said, I have a question. I wired in the funds and I got a confirmation that the funds were received from that Flagstar Bank or whatever. Stretto begrudgingly confirmed that after many attempts at getting them to confirm it. And so now the question is my distribution or whatever, is that going to be coming to my PayPal with my Earn account stuff, or how does the timing work for loans when we get paid back?
Yeah, that's a great question. I'll go ahead and answer that one, Hunter. So the way that they're conducting this is that Earn's going first. Do we know why? No. We have some speculative reasons why, but beyond just making sure that we state the facts, Earn's going first. Those distributions are happening for US creditors via PayPal. The distributions for the loans will happen with your chosen lender. So if you are not doing a set off and you have indicated that you want to refinance your loan and have selected a distribution type, whether it's BTC or Ether or etc., in terms of your voting ballot that was due on, I believe, the January 18th. Correct me if I'm wrong on that one, Tony. I believe it was January 18th was the last day. Then you'll be receiving that secondary behind Earn. So then ultimately you're going to have Earn go first. That'll probably take another 2 weeks or so, is what we're estimating. That's not official information, but we know that there's a manual process going on at some level with the team at Celsius, and then refinances will start occurring after that. So in our projections, we don't have the exact numbers. These are estimations, but those will be separate. And then after Earn is completed through your PayPal account, or in some people's cases, obviously Venmo or Coinbase, if you're outside the States, then ultimately you will be going second, or I'm sorry, technically third, last in terms of getting the refinance done. It will be done through your lender. Your lender will receive that collateral and the principal amount that they pay for you on your behalf. Does that answer the question for you?
Yeah, that's great. Okay, thank you so much.
No problem. Thanks for coming up on stage, Zed.
Thank you, Zed. That was great. So on that, I guess, Dan, I'm going to shoot it over to you, and then Justin, give you a last word. And if we have cover off any last minute questions, but Dan, anything else to reinforce or just remind people of?
Nope, nothing off the top of my head. If you have any questions, don't hesitate to reach out to sales@saltlending.com. We're happy to help. If you want to schedule a call to go over the calculator, or just pay attention to your emails, we're going to try and send out as many updates as we can, as frequently as we can, to keep you guys in the loop. Obviously, be on the lookout for the next comms out of Kirkland, Celsius, Stretto, about indicating who you're refinancing with and the ability to share data. If we have any follow-up questions, we'll definitely reach out directly. But I think today was a great talk.
No, that's great. Thanks, Dan. Justin, how about you?
Yeah, a couple little small minor details just as reminders. If you're looking to do an interest-only loan, make sure you sign your loan docs. If you're interested in doing a fully financed non-payment product with us, then make sure you signify that once you get through the account process. There's a little bit of confusion around that, and so we are able to do that, and we'll be very clear about that. The methodology would be to go through the pre-approval process, fill out the survey, create an account, do ID verification in 2FA, and then do a loan request. When you do that loan request, make sure that if you want that product, you signify which one. We have 3 different ones. We have P&I, that's principal and interest, IO, interest only, and we have the fully financed non-payment product. So those are the 3 that we have. And please signify to us which one you want when you go through that process. And we're obviously, the loan support team, Dan and Trev and others, will be more than happy to help you out. So that was the one thing I wanted to just point out.
No, that's a great reminder, Justin. And for everybody, the modeling and the different sort of impact of those payment options are shown in the calculator, which is another reason to check out the calculator. Not only do you see the amount of principal crypto you'll get back from Celsius for your principal and excess collateral, it also then indicates how you might think about your refinance loan from the 3 different repayment options. Very helpful tool, not only for the Celsius refi, but just to see a little bit more in general as well. So with that, we will greatly appreciate everybody's coming and supporting and participating in the AMA. It's a pleasure, as always, to engage with everybody. But until next week, we'll be back at the same date and time. Until then, stay long, stay liquid, stay salty. Thanks, everybody.
See you, everyone.